How do you trade using multiple targets? That's a question we're going to answer in today's video. We're going to be talking about how to actually open the trade that you plan to take multiple profit targets on, and we'll even dive a little deeper into what market conditions you may need to take into account when placing multiple profit targets. So if you're new here to the trading channel, then go ahead and click that subscribe button to be alerted when we come out with other free educational content like this, and to be alerted when we come out with our weekly prediction videos. If you don't mind, go ahead and click that like button for me while the intro and disclaimer roll to help support the channel, and I'll see you guys on the other side. Alright guys, so before we get started with how to actually take multiple targets, let's talk about some of the main benefits of using multiple targets in a trading strategy. As you can see on your screen, we have a trade on the pound yen. This is a trade we took in the EAP Training Program and that was sent out to each member of that program. This trade is a good example of how we use multiple targets to increase the profit potential of a trade. So let's go ahead and write these out, and I'm going to abbreviate, guys, the major benefits of multiple targets. One could be increased profit potential, obviously. In this case, we were looking at a 93 pip win, and instead we got 93 pip win on the first target and 353 pips on the second target, all the way down to that next major level of structure. If we look back in the past, it's probably going to be on a daily chart, but you can see right in here, market testing this level as major structure. So one major benefit, of course, is increased profit potential on a trade. Another benefit is increased reward to risk ratio, and we can actually calculate this one out. Let's look back over here once more. On this specific trade, we had a 1-to-1 profit target for the first part of our position. So if we were trading with just one target, we would have won 94 pips or lost 94 pips on this position. But because we're trading with two separate positions with two different targets, the way we can calculate it is we have a 93 pip stop here and a 93 pip stop on the second position as well. So we have to add those two up. So we have 93 plus 93 for the stop loss, which equals 186 pips is what we were actually risking on this trade. And you'll see why that's the case here in just a second. It's because we have to open up two separate positions in order to actually take multiple targets on a trade. We'll go a little more into detail on that later on in the video, but 186 pips is what we were risking on this trade. And what did we end up with when it comes to profit? Well, we have to add the two together yet again. We have 93 plus 353. Let's add those together. And that's going to be 446. And if we calculate that risk reward, it's going to be 446 over 186, which is a 2.397, or we're going to call it a 2.4 risk reward that we managed to get out of this trade because of taking multiple targets instead of our initial 1-to-1 risk reward. So as you can see, trading with two targets gives us a much higher risk reward ratio than if we were to just trade with one target. So those are some of the main benefits of trading with multiple targets. Now let's dive into how we actually do this. How do we actually trade using multiple targets? Well, just like I said a second ago, you actually have to take out two separate positions. Now, what does that mean? Well, let's consider that you want to trade a full standard lot, 100,000 units of a currency pair. In order to do this using multiple targets, you'll have to open one position with 50,000 units and a separate position with 50,000 units as well. These two positions will have the same stop loss, but they will have separate profit targets. For this example, we had 93 as a target for the first position and 353 as the target for the second position. So that's how you would set up a multiple target trade. You would have to go in and open up two separate positions with half of your normal position size, half of the position size you would use if you were trading with just one target. And then you would have the same stop loss on each of those positions based on your strategy and two separate profit targets. And hopefully that makes it pretty clear for everyone. I've actually had a lot of questions about how to trade using multiple targets and how to open the position, and this is exactly how you do it, guys. You have to open two separate positions with the same stop loss and separate profit targets. Now, what happens whenever your first target is hit? Well, that depends on your strategy, guys, but I'm going to tell you guys what I do just as a reference, and you'll have to create these rules on your own and decide what you want to do when trading multiple targets based on your own strategy. But for me, once that first target's hit, then the stop loss on this second position, so let's say we have a hit first target. Then the stop loss on this second part of the position gets moved up to break even. That way I've made money on the first part of that position, it's hit my initial target, and now my stop loss is at break even, so there's no chance of me losing the money I just made on that first target. So we'll go through that one more time. When the market presses down to hit that first target, the stop loss on the second part of that position is moved to break even. So then what happens after that? Well, there's a few different ways to look at taking target number 2. You can set target number 2 at a set risk reward. Let's say you wanted to get 2-to-1 risk reward out of every single second part of your position. You could place your first target accordingly to your strategy and then place your second target at a 2-to-1 risk reward every single time. That's one way you could do it. You could use major structure. So you could use that major structure level, or you could manage the position on a lower time frame. Now this is only going to be effective if you're someone who can be in front of the computer very often. It's going to be really difficult to manage the position on, let's say, a 1-hour time frame or lower if you have a full-time job and you're not able to constantly check the charts. Now there is a situation where you could maybe manage the position using a 4-hour time frame or higher if you do have prior obligations. But if you're someone who does have access to a chart majority of your day, then managing the position once you get good at it will probably be the best way to take 2 targets. So let's talk about each of these and how to set them up. So for our first example, let's take this trade. For example, we would have a 1-to-1 risk reward here on this first target, and we would just set this second target at a 2-to-1 risk reward. Once the market hit the first target, we would take our stop loss, bring it down to break even on the second part of that position, and keep our target at that 2-to-1 risk reward. The next one, really similar to what we did here, we would take the second part of that position off at the next major level of structure. Looking left, we have a major level of structure right here. So when trading that second position, you could take a look over there at that major level of structure, and that could be a place you set your second targets. Now for the most complicated way, for the managing the position, this is something that you will need experience with. So this is not how I would suggest that you start automatically. I would suggest learning a little more about how to manage a position before jumping into using it in your actual trading. But when managing the position, one of the most simple ways to do it is to go down to a lower time frame. Let's say we place the trade on a 4-hour chart. We would then go down to a 1-hour chart, and this is going to get a little more complicated than I normally like to go into here on YouTube, guys. But because I want you to have this useful information for whenever you decide to trade multiple targets, I'm going to go ahead and share this anyway. What you would be looking for is the break below a structure support level. Each time the market breaks below that structure support level here, you would place a stop loss above the resistance level created before that break. This would be the highest resistance level created before the break below this previous support level, correct? Then, again, we move that line down. We wait for the break and close below this next support level, which is here. What do we do now? Now we move this stop loss from where it is above this resistance level down to the highest resistance level created before the break of this previous support. Next up, what do we do? Well, now we have a new support level here. We're waiting for the break and close below that level. Once we get it, what do? We move the stop loss down to above the highest resistance level created before that break. Now we wait for a little pullback. Once we get the pullback, we have a support level here. And we're waiting for the break and close below that support level. When we get it, what do? Move the stop loss down to right above the highest resistance level after that break. Now again, guys, I'm going to continue to do this just so it makes more sense to you, and hopefully you're starting to get it by now. But now what do we have? Now we have another support level, right? The market came here, found support, pushed up. What do? We move our horizontal line down, and when that level breaks, we look at the highest resistance level created before the break, and we move our stop loss to above that level. And this, guys, is one of the most commonly used ways to trade multiple targets. Again, it does take some experience and some practice. And also, guys, this must be back tested. You have to actually test this in your plan to make sure it's beneficial depending on your trading strategy. So some instances where this may not be beneficial is if you're a counter trend trader looking for small moves to the upside or downside, you may actually not benefit from taking multiple targets. That's why it's really important to test this for yourself on your specific trading strategy. As you can see, this was a very beneficial way to trade here on the pound yen with the specific strategy we use in the EAP, banking in a little over 400 total pips here on this trade, around 440 pips actually. And I know this actually looks like a counter trend trade, guys, but what we were looking at is a previous daily level of structure. So this was actually what I use as a reversal trade, not a counter trend trade. And reversal trades can be one of the most beneficial ways to trade using multiple targets. And if you want to learn more about reversal trading, we go into depth on that topic in the EAP training course. If you'd like to learn more about that course, the link is in the description. If not, that's okay too. We have plenty of valuable information here on YouTube that you can take a look at if you are struggling as a trader. So make sure to check some of that out and make sure you're subscribed so that you're alerted when we come out with new valuable information for you. The main goal of this channel is to improve your trading through tutorials and weekly prediction videos. So if you feel like your trading has been improved by any of the videos that we've released, then click that like button for us and help us grow the trading channel and reach more traders with this valuable content. If you'd like to receive other free information that we don't release here on YouTube, then you can do that by heading over to thetradingchannel.net and signing up for our email list. And doing so will also ensure that you receive a free butterfly pattern tutorial for those of you who are interested in advanced patterns. That link is also in the description, labeled free training. I hope you guys have a great weekend. I wish you all the best of luck on your future trades. If you're struggling and you'd like to get a little more personalized help from us here at the Trading Channel on your journey to successful trading, then the link to the EAP is in the description. That program's already helped many traders on their journey to success, as you can see from some of the testimonials on the screen. That's going to do it for today's video, guys. Hopefully now you know exactly how you're going to implement two-target trading into your strategy and into your trading plan. Best of luck, and I'll talk to you guys next time.